Hi, I was supposed to show this video earlier today, but I got sick and coughed a lot earlier today. I hope for your understanding if I cough during the video recording. In my last video on this topic, I talked about where you mark out the major support and resistance levels. Now I will show you a more advanced and more efficient variant, namely demand and supply zones, or also known as value zones. I will show you these value zones in stock Apple and the EU STOCKS50 index, the 50 largest stocks or companies in the European Union. Finally, I will also show these value zones in the pound-dollar currency pair. I will begin to show these value zones with the EU stocks 50 cash. And let me fix this chart better for you to see. Okay, I will start from left to right. The past time, let's say, was here in June 2016. And the strategy here is to mark out the wicks from the weekly time frame. The weekly time frame show you the most valued zones to look for. They are more accurate. So I have pointed in here this wick. And well, we don't live in a perfect world. At this case, we can see that the price went down below this demand value zone. And why did this happen? Well, this was the COVID news in February and March year 2020. So this was very special event that happened in this world, this COVID pandemic. But what is very interesting to tell you here that even though the price broke through this is still very value. I tell you why. We can find a very value information if we look in this area here now. I show you. First, we can see a rejection here. The price went down for this week here. You can see the wick. Then the buyers stepped in fast. We had a close into this box again. It shows that this box has value. Then the seller stepped in and they broke down again all the way down here. But buyers pushed the sellers back, and you can see that of this wick here is a bullish wick. The buyer stepping in, and the second wick, this candlestick bar here, it closes inside this value box. What does this tell you? This is very important information. And this information, this secret, so to speak, I'm telling you now, you can use this on daily or 4-hour time frame. In a lower time frame, this is accurate as well. Because this could be a trend reversal. Because very often, especially when it comes to Forex trading or commodity trading, we have a lot of false breaks, like in this case. And you can see here, when the buyers and the market closes in this box, it means we most likely have a trend reversal. And it actually did. The second week, it jumped up here, consolidation. Then third week, we have a close into this box. And we have a minor pullback, retracement inside this bullish bar. And then it's trending higher up to this level. And here you can see a wick here on the upside. That's why I have marked this rectangle here, because here's another wick. And we can see it's very important that you draw these boxes, these value zones long, because after 6 months, a year, or even 2 years later, this box is still value. You can see here. So we have the wick here, we have the price that going down for a half year or so. And you can see that this value zone here from this wick tells you where you shall buy, where you take your entry in this pullback. That's why you must draw these rectangular boxes long away, even further, because they are still there for you in the future. And you see what a huge trend. It's a massive gain on the upside in this trend, using my technique and drawing this boxes value zones from the wicks. You can see here, enter here, boom. You have over 1 year of profit here. Then we have the top. Here we have a wick, and the price went down, and I marked another box here, value zone. And here's a little tricky one. In many cases, if the wicks are long and the body is very small, it's not that good to use it. For example, this one. It's not that accurate. It would work in this case, because when price went up here, it touches this level here. And this upper wick touches up here. So I could actually draw a box here, out here. But I choose to do using another trick. That is, when you see these long wicks and you don't like it, you can also, this is a trick I can reveal for you. You can combine 2 candlestick bars, take the lowest point of this wick, but I don't like this long wick because there's a small body. So I only put the bottom of this wick here and combine the upper box with the other candlestick bar lowest point here. You see, lowest point with this and this lowest point here. This is also a box technology. You can, not technology, but a technique you can use, technical trading. So here we can see that this support level breaks. Price went down to this box here. So you can buy here, good profit. And then you're thinking, when shall I take off the money from the table, cash in the profits? Well, then it touches the box here. So you can see how important it is that you do this job here in November 2021, because many weeks later, this level works for you to take the profit. Go up here and meets this box. Then it's go down, meets this box again. You have a first touch in this box here. it pulls out. You have a pullback into the box, goes up, pullbacks to the box. You have the trend. And here goes down into the box because it's a demand zone. And you're using my wicks here. This was close, but not. And here again, you have 1, 2, 3, 4, 5 weeks it goes down to this demand box value zone and then went up. So this is very valid. Let's go further to the next case. Let's take Apple stock. That's a tricky one, but I don't want to show you and lie to you how perfect everything is, because in trading, you must use a lot of experience, a lot of measurements, and lots of different techniques combined to make good entries. So this is the basic levels. This is the first thing you do when you do a new trading week. So you can see here the stock Apple. We have wicks here, and I draw a box out here. And the price goes up, and I draw a box here. You see a wick here. These value zones are most accurate and effective at very high levels at the top or at the very bottom of assets when you're trading them. So these are much more accurate than using this one and thinking this is the highest level. But that's another video school, why this shouldn't be the highest level. So you can see here, I draw this box here at this wick, it went down. I draw this boxes here, value zone of these 2 wicks. And then the price shoots up from this demand zone up here, then it goes down and then up, boom. I will enhance it, you see here. This week touches this box, you see, up here. So this tells you that you don't even do lots of profits down here, but you leave this box here, because when it's shooting up here, you know where you can take your profits. Most likely it will touch this into the zone. So you take your profits from your bullish run here, take the cash, and then you do the opposite. You're shorting it. You're going short here, and boom, you take the money on the downside. And here, this is a very important lesson, that we can see that the price breaks down here several times below this value zone. But as I mentioned before, it tells you a lot of information, because we see a rapid up move here. When it goes down, it's very fast up again. Then sellers take it down again, a little bit lower. The buyers stepping in very fast again. And here you see it closes inside this box. This is also a bullish sign, but of course, at this time it was tricky, it went down so far. But this is the first sign that this can actually be a trend reversal on the upside. And this is the second sign for a reversal. It closes into the box. And then we see a trade on the upside. Then we can see again, if you have drawn these wicks here, like I did like here, once more, we have the price here. This is today. I have shorted Apple stock heavily here now, because it touches my box. Exactly the same as it did here. Price went up here, the wick touches the box on the downside here, the floor. Now it touches the floor. So I sell heavily here now. Even though if the Apple stock will run up further, I'm selling here. Every time the price is rising in this box, I just sell. I will sleep good at night because I know this will change down, change direction on the downside. Huge money for many weeks. Finally, I will show you the currency pair, pound dollar. And let me do like this. Yes. Can see here. We have a consolidation phase here, range market. Here we have a false break on the upside that go above this line here, and then breaks down. And this is a wick. I draw this wick here all the way, and you can see what happens. Here it touches exact at the box, went up for several weeks in profit, went down again, touches the boxes here, no breaks below, it goes up for 2-3 weeks, then a third time it goes down again, you could buy, you have profit for a couple of weeks once more, and fourth time it goes down again, and you can ride on this trend all the way up here. You can see that, sorry. So, now it's better. Here's also a minor wick. So this, you can see, I mean, let's see, it's June 2001, in June. So you can see that this is so much value, so long time in the future. Here we are in January 2009. So we have 8 years between these two bottom. So you can see after 2 years, this is still value. It go to this box. I draw this very long because, as I told you, this can be a resistance level, resistance zone about 3, 4, 5 years from now. Also this one, a wick here. And here the same, you can see a wick goes down into the box and then down again. You can ride all the way here. Here's the wick for the future, this box again. So you can see here, it goes up to my box again. Here, went down, very close this time. And here you can see it went up little bit above, but it closes into the box again. It tells me that this is bearish. And it went down. And when you're using these value zones, remember, you're using them together with the support and the demand levels, like here. Here you have a box, a structure. This is the top here. So I pointed out a level here. Here it works. Little bit went down. Wicks there. But you see here, it works because here you have a resistance level in this upper box here. And in the future, that will be support level, resistance level, then breaks up, resistance, break up, and this is support level. Here you can see that these wicks here, when I draw this long here, when you do this and you are here, this is now, you will be kind of angry, like, what is Andre talking about? The price doesn't touch this, not even here. You're thinking, this day trader, he doesn't know a shit. But listen to me, be patient. Wait for this one. Boom, here. It touches, it respects this value zone here twice. A double top formation, which is a very bearish. Here is another example. This is a very, very long wick, which is not good. 50% of the structure. The body is 50% and the wick is 50. So, as I told you before, my trick is you mark the lowest point of this low wick here and combine it with the other wicks on the right side, either here or here, which I did here, okay? And what will happen here? You take your profits from this run up here, you sell because it's in the value box, the supply zone, went down, and you're thinking, when shall I take the money from the table? You don't have to do anything about a year here. And here, you touches the box exactly here with my technique. Here, you take the profit. You don't have to do anything for a year. You're just laughing the whole way to the bank with your profits. Here, boom. And when you take your money from the table, you cash in, then you go long here. You're shorting the pound dollar, take the profit, and then you're buying the opposite trade. And you see, it hits the box again. You cash in here. And then you're selling, you're shorting this currency pair again and take the profit all the way down here. In this case, you don't know exactly because you can see this box doesn't go on the left side further. But if you're watching daily time frame and 4-hour time frame, you will see some bullish bars here. So you know that this could be a trend reversal on the upside. So I think I will round up this video. You can see here. And we are here today. I have bought massive contracts on this British pound US dollar pair because it hits the value zone here, the demand zone. Okay, I think that was it. I hope you enjoyed this video and feel free to watch it over and over again. So you can use this technique with my wicks here, these value zones in your trading. It doesn't matter if it is commodities, stocks, Forex, it works everywhere. You can be a pro, whatever you do. It's easy to make a lot of money here with my technique. Okay, take care. Bye for now.